The Fed's no change in terms of rates and also the statement. Here with more is Andrew Levin, former Federal Reserve Board Special Advisor and Dartmouth Economics Professor. Andrew, thank you so much for being here. We really appreciate your time as we look at this statement and try to figure out what to make of it here. One of the interesting things that you've written about recently is the unanimous nature of the Fed typically here. At a time like this, we just heard the debate, right, that we got a little bit between Bob and Greg. Why isn't there more debate at the Fed? And what do you think is being lost as a result of that?
Yeah, I think the Fed is making a big mistake. There are some super talented people now at the Fed on the board and among the regional presidents. The problem the Fed should be aware of is that the Fed's going to be in the presidential election next year. They don't like to be in that position. But if inflation is running high, if the Fed is kind of shrugging its shoulders, it's not sure what to do. That's just not a good situation. That could have long-term adverse consequences for the Fed. So the problem isn't just that they're being short-sighted about the inflation. The Fed needs to be a team of physicians with some real open debate and discussion. These are tough issues, the right way forward. The public needs to have confidence that these decisions are really being taken seriously. Now, just one example. So you said to Bob, well, he's kind of in the minority. First of all, the Fed's been consistently wrong for several years, and we heard that very powerfully this week. And secondly, Bill Dudley, who's a former president of the New York Fed, this morning wrote an op-ed where he said he thinks the Fed is missing the boat. So how could it be that people outside the Fed have some pretty strong, diverse views, and we're not seeing it today? This was a unanimous decision again. Just no sense of real debate going on.
And do you expect that to change, Andrew?
I think for it to change, the chair is the most powerful person at the Fed. And we've had prior chairs who, Ben Bernanke was one, who really encouraged debate, didn't mind if people had dissenting votes. The approach that the Fed's taking right now is much more like a corporate board. We all speak with one voice. If anyone has any discomfort, it's not supposed to be revealed in public. We know that that's not the right way for a really good committee to make decisions. We know the Supreme Court has difficult decisions to make, and sometimes they're 5-4, or 6-3, or 7-2, and we may not agree with their decision, but we at least the public can know that those are really serious debates, and that's what should be happening at the Federal Reserve.
Andrew, what is the biggest risk then of that sort of lack of debate, specifically for this Fed and for this moment in time? Is it that they're not aggressive enough and they don't continue to raise interest rates? Or is it that maybe they've already raised too far? I mean, what do you think?
Okay, I would say the biggest risk that they're making right now is they talk about taking a meeting by meeting approach. And that's just not the right way to make monetary policy. Monetary policy you have to have a strategy. You have to explain to people where we're heading. Again, like physicians, there's a bunch of different tests that come in. The physicians, a team of doctors, a difficult case, are discussing diagnosis, prognosis, what's the treatment, if that treatment doesn't work, what's next after that. If Chair Powell today would talk about the risk that inflation does end up being twice their target, which is my expectation, actually, that's where things are running, that twice their target, what more are they ready to do? Explain to the patient and the patient's family, what kind of treatment may be necessary. And sometimes it's painful in the short run, but there's longer run benefit. You want the patient to get back to full health. Inflation is terrible especially for ordinary working people and families and retirees. So we don't want that to be a long-run chronic problem. We need to figure out a way to get back to price stability.
And I'm going to get you out of here on that, Andrew. This question of inflation, obviously at the presser coming up, there's going to be a lot of attention paid to Jerome Powell, the trajectory of inflation he sees, still well above his target. Where do you see the trajectory of inflation from here, Andrew? And what are just the puts and takes, the variables to that?
Well, I'm a pro workers. I think it's great that workers are starting to get more cost of living increase. That's what we saw this week with United Auto Workers. Okay, they're getting, but as far as I can tell, 6 or 7% pay increases per year over the next several years. A lot of workers would like to get a 5, 6, 7% pay increase. So there's been a big cost of living increase, but the challenge that creates for the Fed is we're now in a what I would call a very entrenched situation with inflation running in the range of 4 to 5%. What's the Fed's plan to bring it back down to get back to low, stable inflation of around 2? That's the urgent question for the Fed to explain, for Chair Powell to explain at the press conference today.
All right, we will all be listening. Andrew Levin, thank you so much for joining us.